Hello friends, this is Akulmach live. My name is Chandrakant. Today morning, the first tweet that I got at 4 a.m. in the morning was news about Citibank. Citibank has decided to move out from the retail segment across the booming economy like India and China and 9 to 10 other countries. So 13 in all countries. They have acknowledged that they don't want to service the retail client, but they will be working and finding customers in the corporate arena. So that is a very big news. Citibank has said, and this is exactly what we want to discuss today. Before we start our discussion, a word on the giveaway. Akulmach works with many SMEs and startups world over, helping them in not only building their sales and marketing teams, but also help them in improving their success rate. As you can see, we have summarized our years of knowledge into these easy to follow steps, which can be used by any smart leader to promote their group or a company. In order to encourage people to take the right step at the right time, we have used this proprietary graph in our corporate memorabilia so that the knowledge can be accessed by whoever, whenever, wherever it is needed. You can become eligible to get one of these beautiful gifts delivered to your doorstep for free. All you need to do is to subscribe our channel and smash that like button. Also, please watch this entire video and provide your valuable comments, suggestions, or you could also share your experiences. Person with the best comment and interaction would be chosen to become a free recipient of one of these displayed items here. In addition, we would invite you to Akulmach Live to participate in our show as a distinguished panelist. What are you waiting for, friends? Go for it. Now, let's get back to our discussion. Friends, let me introduce my guest today. His name is Neville Gaunt. He is joining us from London and he's also chairman of Mindfit Limited. And he's a very senior member of our industry. In fact, the subject of today's discussion is the very important news related to fintech. And Neville has been a man of finance. So I think he's the best person to discuss this.
Good morning, CK. Good morning, everybody. And yes, amazing news that hit the airwaves for last thing last night or first thing this morning, depending upon where you are in the world. And it's all to do with Citibank pulling out of the consumer market, not the commercial market, not the business market, but pulling out of the consumer, the retail market, which has sent ripples around the world. Lots of my expat friends that are literally resident in all of these 13 countries where Citibank have announced they're pulling out, have got Citibank accounts. What are they going to do? And at the moment, I have no idea. So over to you, CK. Why don't you let people into the secret what's happening?
Well, it's a trending subject since very early in the morning, since about 4 a.m. in India also, because Citibank was among the first foreign bank which established in India. And after that, the HSBC and the Standard Chartered Bank came later. And HSBC, even though it's a Hong Kong and Shanghai bank, but it is essentially a European bank. It's headquartered out of UK. So and then Standard Chartered Bank is again a European bank. But Citibank has been one of the largest institution, the first one to come to India, and now they are saying that they are getting out of the retail business from India and China and 9 other countries, 9 or 10 other countries, and these are all consumer based economies. And Neville, let me share something that I know because I worked for in the banking industry as a solution provider. While talking to banks and different bankers of different age of different countries, what I learned is none of the banks actually wants to do retail business. I mean, even if you have a large bank and they say that I have so many millions of customers, the fact of the matter is they don't want any retail customers. It's a liability for them, and they are forced because of regulation when they want to open a branch, at least in India, I can talk about that. The government says you should open a branch and you should have these category of people as your retail client. So they're forced to open a retail branch, and on the side they will actually start their business, corporate lending, etc. So I think that is where the problem is. And I'm sure Citibank decided to moving out of the retail business, especially countries like India and China, where 50% of the world population resides. Um, Shows logically to me that there must be having some very serious cash crunch issues with the bank. Otherwise, they will not move out of at least India, because they were the first one in India to start the ATM tsunami way back in 94 95 time frame, and they were the first one to come out with a lot of new age advertising, no branch banking. All you have to do is just go to the ATM, and that is why if you look at Citibank footprint in India today, they have not more than 8 to 10 branches across the country, but they have huge numbers of ATM, NCR, Diebold, all kinds of ATMs all across the country. So I think they have a huge investment in this country, and it'll be a bummer if they start to get out of the consumer market. That is my assessment of the situation, Neville.
Well, you're absolutely right. You hit the nail on the head right at the very beginning of what you said there, CK. Is banks really don't want to be in the retail sector, which is why we've seen a huge influx of the fintechs. Mobile phone, even Apple Pay, for instance. I mean, they've entered that consumer market, recognizing that it costs a lot of money to have a personal bank account. And it's been a fact for years. And even now, you hear noises, let's say in the UK, from time to time, that banks are thinking about charging for using ATMs, and they sort of put it into the marketplace as a page 4 type item, and then they look for feedback. And of course, the feedback is, we don't want to pay for cash. Thank you very much. It's your responsibility. You've given us it for free. Don't take it away from us, because, by the way, we'll just vote with our feet and we'll take all of our banking elsewhere. So banks live on this fine edge, knife edge of, as you say, governments insist when they come into commercial banking and investment banking that they open a retail arm. That's part of literally your operational license when you go into a new country. But this is huge. This is one of the largest banks in the world sending a message to say we can't compete. Because the articles I've read are all about scalability. And despite the fact, as you mentioned, two of the biggest countries in the world, China and India, with over a third of the world's population between the two, they can't scale it in those two countries. Makes you wonder, doesn't it? But this is there's something underlying here, and I think you hit the nail on the head. I think this is about cash. I think this is about recognizing that these banks do have a responsibility to their investors. It's return on investment. Retail banking has never made any money for them. It's a loss leader in many respects, and they're just basically saying we now can't compete. All of these apps that are coming through, these banking apps, these small businesses that are growing at some phenomenal rate, they're well capitalized, and they're after the mass market. So let's let them have it. Let's work with them. I think this is a very smart move by Citibank, frankly, despite the fact I am a Citibank customer in one particular country, and I'm going to have to see where I put my funds. But it's a phenomenal change in the retail sector, and this is about we need to look at the reasons why, and this is about consumer behaviour, And this is the first bank that's basically said, we're listening to you. We can't compete with what you're asking for. Therefore, we're going to take a back step. It makes you wonder what the repercussions are going to be, though, with regards to the commercial sector.
Well, based on my little knowledge of banking industry, I think there is another reason that the banks actually try to get into retail when they start their operations is basically to gain the market capitalization. Because if there are funding agencies involved behind the bank, they will be able to say, hey, I've got these many millions of clients with me. So I think that is one of the reasons. But having achieved certain scale, they just want to get out of it because it becomes a liability, as you said. I think you also hit the nail on the head when you said that there are so many apps. Now, if you look at Indian market, I will talk from the Indian perspective. There is an application which is actually started by the government of India, and all the other applications, these payment applications, are actually using that core application which is provided by government of India. So if you have something called phone pay or Paytm, there are more than 10 to 12 different applications. Even the telecom operators have their payment gateways now. So all of these have the backends with the government application, which is called Beam. And this government application has done very similar stuff like WhatsApp. They have linked. There is no need to open an account. They have they transfer money. That means debit something, credit something, based on the mobile numbers. So I don't need to open an account if I have to send money from A to B. I can just open a wallet account in any of these apps, and without having a bank account, I can still transfer money from here to there. Now, when these applications started, their minimum thresholds was very low, something like $100 or $500, something like that. Now, all of these thresholds have gone up. They have gone up to 10,000 rupees now. There used to be 10,000 rupees, but now this year it has gone up to 20,000 rupees. So I think it's a substantial amount. Even in a banking system, there is a cap on withdrawals, and which is depending on type of accounts that you have, it is 20,000 rupees. So if you are a very high net worth customer, they will give you a high withdrawal rate. But then 99% people will have 20,000 rupees withdrawals. So now if you compare these apples with apple, they are very similar. So option one, where you don't need to open an account, there is no need to give your photographs, your KYC. All you have is a mobile number. Download the app and start transferring, and the limit is only as good as a banking system. Now, the other thing which has happened in India is that the highest threshold has been capped by government, because government wants more digital transfers to happen. So they are saying that the highest cap that you can transfer is 200,000. So even if you are a high net worth individual, it's not that whole lot of money you can transfer. It's just 200,000 you can transfer, and after that, you have to issue some instrument, or you have to do it digitally. So I think that is where the systemic issues are coming. I'm sure all banks are facing, and Citi Bank is the first one to recognize and acknowledge. Because this, and I think there is one more issue, Neville, that is the cryptocurrency. Because in India right now, crypto is not there. There is a case pending in Supreme Court. There are consumers who are saying, why not crypto? So whereas in US, there is cryptocurrency which is legal. It's a legal tender. So I think if you go using the cryptocurrency, then obviously there is no bank there. So Citibank gradually keep losing out that market segment, either to application providers or to crypto providers, and they will anyway have to provide, because being a bank, they have to always be ready to pay out the money. So that is adding a lot of these costs. So I think that is where the balance is. And I think you raised a very important question that I'm taking a little bit more time on my monologue here. You said repercussions. I am thinking that when they open a bank, there are a lot of very strict guidelines because this is a regulated business. So can Citibank get out of India? I don't know about China, but can they get out of India when they say that, hey, we want to get out of India? Can they really do that? I have my own doubts.
Well, you raise a very good point. I mean, if part of the commercial requirement, the government requirement was you need to have a retail arm, it's one thing for the company to turn around and say, we're just going to close the retail arm now we've got to a certain size because we can't compete. And there's another thing that's effectively the government turning around and say, well, that means you're exiting the country. Goodbye. That's putting, a bit of a blunt instrument against this, smashing a glass with a hammer. However, my guess is that the repercussions that I'm thinking about perhaps is that they're packaging up their retail arm and they're going to partner with someone that has got scale. Now, that could be a fintech, could be an app company, it could be anything. So, in essence, my guess is that if there are these commercial requirements about country entry and country exit, I no doubt Citibank are a very smart group and they will be considering packaging up their loss leader in some respects, but huge amount of assets, really, a huge amount of customers that would be of value to somebody else. And again, Citibank are not stupid enough to just give it away. So they'll probably partner with somebody. I haven't seen any article that said that's announcing a new partnership. But let's watch this space. I'm sure that's probably the next thing that will be happening. Just one thing you mentioned about KYC. Know your customer, know your client, which is always big in the terms of consultancy here. Certainly in the fintech world, highly regulated. In the UK and across Europe and certainly in the Western world, you cannot open a bank without having certain credentials. So whether it's an app or a physical bank on the high street, they still have to prove, or you have to prove, who you are. And I'll give you, for instance, I opened a business bank yesterday online for a new company that we've just created. And it wanted not just a picture of my passport, but it wanted a scan of my face to prove that I'm the person on the passport. So again, it's digital, so they can do these things very quickly. They can check your home address, they can check this and that and the other, prove you're a real person, as long as you're not being fraudulent. And that's the whole point about this, is to tighten things up. So we don't have money laundering. And we are real human beings. But anyway, that's a slight aside, and I'm sure there are certain requirements in India that means that the KYC issue still exists. And because what we do know in the banking arena is that we're not going to get less regulation. It's always more and more and more regulation. So on a simple fact good news for Citibank is that they have been strong enough to say, we need to get out of this. It's not commercially viable for ourselves. They're the first big retail bank to say we're not going to be in retail in certain countries. So I think we're about to look at a shift, maybe a paradigm shift in the banking industry, recognizing that the fintechs are now challenging the status quo, which is good for you and I as a customer, I hope. I'm not sure yet.
Well, I think you raised a very important point about KYC. So in India, at least, when the mobile phone is given to you, it is linked to your national ID, which is biometrics based. So when you are transferring money using a mobile number, it is all checked back to back. So the KYCs are taken care. I think there is another issue, Neville, with regard to Citibank. While competing with the Indian banks, because Indian banks banking system started in 1947, in that time frame. Even before the independence, there were banks that existed in India. So Indian banking is not something which started very new. It's been around for quite some time, or at least 100 years we can say. I think 1880 or 1890 was the first bank that opened here in India. So when Citibank entered the market in 90s, they were already competing with established players. And in order to compete in the retail segment, because they knew that the consumer market is something which they can capture immediately, and to set up your branch office and branch network will take a lot of time. So that's how they enter the market with ATM strategy. And in order to compete further, they actually went around and said, hey, why don't you open your salary accounts? So that was their entry into the corporates, to persuade them to open a salary account with them. And if they get out of the retail business, what will happen to these millions of people whose salaries are being credited while Citibank do not have branch network here? I mean, somebody is based in, if you're in major city like Delhi or Kolkata or Bangalore, you may have one branch in a city, in a large city in India, one branch. And if you have any grievance, you can at least drive 100 kilometers and reach that branch. But in a place where there are no branches at all, I mean, you can't expect consumers to take a flight and go to Delhi or to go to Chennai or go to Bangalore. So I think I see a huge ripples now coming in, especially with regard to salary accounts.
Well, looking at the overall commercial aspects around Citibank is that they've taken this very bold step. It will send a ripple through the fintech type of arena. Maybe everyone was expecting someone to move. Were they expecting Citibank to move first? Who knows? The point is they have moved. They've given their reasons. It's scalability. Underlying that reason is they can't compete in the cash world. So that's their decision. So now let's look at what's going to happen afterwards. And I'm going to be interested to see the ripple effect, as they say. So been good speaking with you today, CK. And let's hope people are now going to watch this with open eyes.
Absolutely. Thank you so much, Neville, for finding time and discussing this very, very important issue with regard to fintech, with regard to Citibank. And I think we will keep coming back to this story. But for today, I'd like to say goodbye.
Cheerio.
Cheerio.